Welcome to News Express, exclusively brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. It comes to you every single Monday morning, of course, giving you the latest in the world of business right here on the pages of the paper. Good morning and welcome. Well, top on the front page this morning, we have this one: Suez Canal blockage prelude to global supply chain disruptions. $10 billion lost daily in cargo. Canal handles 12% world trade. SCA says refloating vessel technically complicated. Could take weeks. 300 vessels trapped at canal waterways. Oil and gas shipments to Europe use canal. Yes, and of course we've got latest though from this particular news here, stating that officials are saying that the huge container ship has been wedged across the Suez Canal for almost a week. This particular ship has been freed from the shoreline, and it has been corrected by 80%, according to the Suez Authority right there. That's the very first headline on Business AM this morning. And just below that headline, unemployment defies government policies, worsens misery index. Are we surprised? Well, not at all. Despite the government's huge investment funding, youth employment initiatives, we are still seeing worsening unemployment numbers. United Capital, FBN Quest, AfriInvest analysts weigh in. Analysts canvass structural policy changes. That one still is a headline on Business AM this morning. And over to the summary section, we have a couple of interesting headlines there. AFDB sees rise in Africa's debt. That one's on page 3 of the paper. The finance and investment segment talking about equities wins losses with 100,000 naira. That one's on page 11 of the paper. Over to company and business now. We have this one. AIG writes book on Access Bank, launches Family Foundation on page 22. And I'll take one last one here on the transport business. We have CFAO taps Jibuno for Suzuki brand. Catch that one on page 29 of the paper. As always, I've got the publisher Business AM joining me for conversations this morning. Good morning, Mr. Philip. It's great to have you on the show.
For having me.
All right, so I'll just like to start the conversation with the unemployment headline right here. And according to this headline, as far as I was able to read, analysts have given their views as to the way out of this situation. What are they saying?
Thank you, Rachel. Unemployment is a major factor when you're considering the level of poverty in a country. And recall, Rachel, that Nigeria has been listed as the poverty capital of the world. You know, unemployment produces income, whether at a high level or low level, and then citizens have money to be able to spend, and the economic will of the country goes round as a result of that. But unemployment is devastating, and it is a major challenge. You can see there, the headline talks about increasing the misery index, and misery index includes a poverty situation in the country. Now, so many things have come up there, that led to that. Nigerian National Bureau of Statistics came up with a figure, about labor force rising by 4.3% in the last quarter of 2020. That is labor force meaning individuals from between the ages 15 and 64. And that the chunk of the chunk of people in that group is 122 million as at the time that statistics was compiled, and it was a rise by 4.3% over a quarter earlier. Now, what has happened here now? Analysts are weighing in, and they are looking at how can this mountain of problem be resolved, So they are suggesting a policy framework for partnership between public and private sector in a way that expands the job creation goals of the government, A policy framework in terms of regulatory and economic, regulatory. I'll give you a typical example, There has been, in terms of the various sectors, let's look at a high employment generation sector like manufacturing. Nigeria has been going down in manufacturing for a very long time, relying heavily on exportation of primary produce. Recall that the WTO Director General, Dr. Ngozi Okonjo-Iweala, came around the other time and was telling us how the manufacturing sector in Nigeria has been, been poor. And this goes to show, when you have, for instance, policies, regulatory policies that tend to stifle growth, in a particular sector, that is supposed to create mass employment. You have this kind of situation happening. So they looked at regulatory and economic policy framework, how these can be rejigged, to become positive, They also talked about the institutions responsible for job creation, the institutions within the system, whether in the public sector, that is responsible for managing job creation activities, that they need to be strengthened. Sometimes the analysts are saying that sometimes this could be as a result of weakness within those institutions, the ability to think through a lot policies, and then to be able to even generate the type of policies that can produce these jobs that we're talking about, And then they talked about on top sectors. They mentioned mining, that it should be opened up to private sector participation. Sometimes you close a sector, I put it this way, Rachel, the economy is too narrow, so policy formulators and government policy makers, need to think in terms of expansion. We need to create various channels, for job creation, not just narrow your policy in a particular direction. Sometimes you narrow it in such a way that you concentrate on areas that do not even produce big job numbers. For instance, focus a lot on the oil and gas sector, but the jobs that are created in the oil and gas sector, are narrow in terms of numbers. So you must focus. You must create a broad economy that is expansive. So that jobs can be created across board. There are statistics that suggest that we have 37 million micro, small, and medium enterprises in the country that create 59 million jobs. A lot can be done in that sector in terms of concentrating policy initiatives that will expand the sector, that the sector can even create more jobs. We've heard across the world how that particular sector, this micro, small, and medium scale enterprises are the engine room of growth, or whatever, the engine room for any economy. Nigeria will need to do that. Analysts are saying that there's a need to look at how some sectors can be expanded, and opened up for private sector participation. There's also the talk about investment in development of human capital, revamping of the education sector. Some analysts looked at the budget provisioning for education and considered it very inadequate, for the type of economy that we have. You have an economy that is over $450 billion, and it's underperforming, and you need a proper investment in human capital development to drive growth. We can go back and look at the numbers. Unemployment worsened to 33.3% from 27.1%. It's the worst performance on record since 2010. These statistics has revealed. And youth unemployment is highest, and this is in spite of a lot of initiatives, that have been taken, to drive up employment. You recall, Rachel, we have spoken about a 75 billion naira youth investment fund that's targeted at creating 500,000 jobs by 2023. There's also the 2 trillion naira stimulus package for MSMEs. Now why are these not resulting in positive job creation?
That is a big question.
That's a big question. So they are saying the problem could be the fact that perhaps there isn't a good thinking through, these policies before they are created. The fiat-backed interventions is inadequate so long as structural issues remain. So there are structural issues within the economy, that need to be tackled, and then you don't just wake up and say, oh, because you throw money at everything, and perhaps even before you have sat down to think through or plan through what you intend to deliver with this. So a fiat-backed intervention or fiat-backed interventions that we have seen, will not solve the problem because there are structural issues within the economy. For instance, they talk about unemployment mirroring, the numbers are mirroring the level of growth in the real sector. Again, that goes back to what's it called, to manufacturing. The real sector of the economy is in a poor state. And if the real sector is in a poor state, what you will find is that you have job losses. You have no capacity or ability to employ more people. That sector in particular, given the supply chain challenges that COVID-19 brought, induced what you call slump in demand. Because many workers lost their jobs. What's called purchasing power went down as a result of people not having jobs and not having incomes. And then therefore that sector is what's called stifled as a result of so they cannot create jobs. And again, they say that this situation is not helped by population growth. Our population is growing at 2.6% the last time numbers came from IMF, and this is outperforming the real economic growth within the system, and if you have that, many economists have said that if you have a situation like that, then any economy is bound to suffer, and that the suffering will dovetail into unemployment, and that those are the numbers that we are seeing. You have poor FDI inflows again with different factors responsible for this. You have the COVID-19 situation, which is disrupting economies across the world. So FDI inflows, but then you have unfavorable macroeconomic environment, which we have talked about. All of this would come together, to create the situation that we have in now, where unemployment has risen sharply. You can't have a 3.3% unemployment situation in an economy and have a happy country.
That's not possible.
And this requires the growing misery index. Is showing on the faces of people as you walk down the streets in different parts of the country, whether be it the north, be it the south, or be it commercial capital Lagos. You find this situation becoming debilitating, Rachel.
Well, we can have this unemployment conversation for an entire day, Mr. Philip. But the truth is, as much as we hear policies being put in place, initiatives being carried out, is it reflective in the numbers? Is it reflective in the living standard of the people? Oh, well, let's move to other parts of the conversation now. Of course, the first quarter ends in just 2 days. What is the assessment of business day for the equities market in the first quarter?
Well, we have looked at that again. There are a number of factors that are beginning to show up. We've talked about the situation with the yields environment, both in the money market and then in the capital market. They play off against each other. Yields are rising in the money market. You see people moving from the capital market to the money market. You see yields. If the capital market is favorable, you see the situation. People, investors just react that way. A good story, we took some numbers that came up recently by one of the analyst group, who were looking at if you had 100,000 naira invested in the first quarter, and into some stocks, you will find there's a table on there that looked at a top 20 performance in the market. as at January 4th, if you put money in this, if you put on 100,000 in these organizations, you will find that your numbers will have, your 100,000 will either have increased. The top on that is 171,000 naira. Your 100,000 will have moved 171,429 naira. If you had put that in FTN cocoa processors, that's the highest for that. If you had put it in cuties, your 100,000 will have given you 13,300 returns. Again, if you were not careful and you put your 100,000 in the top losers, Lasako Assurance at 31,400. Your 100,000 will have gone down to that 1,405 naira. If you put your money in Itana, put your 100,000 in Itana, you probably will have lost a little bit. So that's 96,774. Naira. That's what it will have produced. But there are people talking about there'll be a push. There are factors that will lead to a market rally in the second quarter and beyond. Particularly if you're looking at financial stocks. They will lead. Analysts are saying that they will lead the pack. In the second quarter. They are projecting that forces that control the market will push investors to position for profit taking, as most companies will pay out dividends where there is an increase in their profits. So there's quite some positive vibes going on with regards to the second quarter, perhaps as a result of. So some say oil prices rally, so that's positive news. The regulation from Monetary Policy Committee may create support for the market. That's again positive news. Treasury bill rates in the fixed income market will also stir up the rally in the market. Again, that's positive news. So these are the factors that they've weighed in that analysts have looked at and said that we expect that the market will be positive in the second quarter. Especially if you look at corporate earnings, you've seen some numbers come out for the first quarter. Second quarter, they're expecting more to happen. Positively to produce to lead to a market revamp and positive. Recall, Rachel, that the month of March was not a good one. We've seen a bull. We just saw a bull run. Last week.
Yes.
After we saw a bull run last week after 7 weeks of a bearish run. So you are looking at 2 months already. So first quarter not really good. Because if you had 8 quarters and then you 7 weeks of bearish run with only one positive bull run, then that was really a bad quarter, for the market, But analysts say there's more profit-taking activities ahead that this will dominate the market, particularly this week. And then they're projecting that ahead to the entire quarter, that some positive development might happen, Rachel.
Right. We'll wait and see how all of this will develop, Mr. Philip. Thank you so much for joining me this morning.
Thank you, Rachel, for having me.
And Philip Isakpa is the publisher, Business AM, Nigeria's fastest growing financial and business newspaper. Stay here.